Everybody, welcome to TraderMerlin Show for your Thursday afternoon edition. We're going to do something different today. You're going to see an object come creeping in slowly from the side of the screen. Yes, one of my local watering holes, the Huddle. I'm having a beer today. Why? Because it's my Friday for the show. I have a meeting tomorrow at 2 p.m. that I cannot get out of, so this is going to have to be our Friday show, everybody. Cheers. I should have told you earlier so you could have joined me in a nice frosty beverage, but I'm going to just make it an honorary Friday for us. All right. Hopefully you guys were part of this nice roller coaster ride of a market we had today. I did add to 3 different positions today with regards to options and puts and actually some calls as well. I know, does not have to be Friday. That's true, Lisa, that's true. But normally I like to keep that as like the Friday is kind of my benchmark. I just, exclamation point for the week. Still got to work tomorrow, but I won't be doing the show, unfortunately, which I actually love doing this show every day. But sometimes work calls, work pays the bills. So hello, skilled stocksman. Les is slipping his second day in a row. Les, you've been beaten out on first one there. But good to have Tibor, Susan, Eric, Gallo, P, Johan. Good. For you guys that are new, hit that subscribe button. And hopefully you guys will be joining us for more sessions. Tom, Lori, Mario, Eric, Siraj, the regulars. And hello, Mr. Collins. Good to see you up there. Chris, I'll throw it out there. So one of my dream cars has always been, for those that know me, I actually was a 1955 Porsche 550 Spyder, which I owned and sold it. The other one, which I really want to get, is a 1965 Chevelle, preferably something with, at least a 350 in it or something like that. Keep your eyes open, Chris. I know you're always into vintage cars. Maybe I'll just buy it, keep it at your shop, and you can just work on it and put it in a good shape for me at some point. So that's the next one's going to go in the garage once I can clean the garage out. All right, today's topic comes in from a few different pieces of economic data, really talking about is the Fed hitting the mark. And the only reason I'm keeping this subject here is because as traders and investors, we have to keep an eye on what the Fed is thinking, what they're doing, what their goals and objectives are, because clearly they're steering the boat. And it doesn't always mean they're going to be steering the boat to the upside. Now, granted, since 2009, we've had this relentless bull market. Everything looks unbelievably bullish moving to the upside. Of course, Chris says he's got a 1965 Chevelle wagon. If I want a wagon, is it for sale? Of course, everything's for sale, right? So, the Fed regards to pushing prices up, they don't always have to do that. And of course, there is this belief that there is this kind of dual mandate that they have to meet. So I thought, let's talk about that today. And then I'll get to some of those listener questions that are coming in. I can see Darren, I'll get to your question in a little bit. I question, are they hitting their mark or not? Now, one of the things we have to look at is what is their dual mandate? For those that don't know, the Fed is tasked with 2 specific things. Of course, it seems like every other government agency, FTC, SEC, FCC, SEC, if it's got an EC in it, it's probably overstepping their boundaries. So the Fed should be confined to achieving 2 things. Number 1 is price stability, hence inflation. We've been talking about inflation for quite some time. Now, if we look at the charts of this, I thought this might be rather interesting. So first one is inflation. This is our overall inflation as measured through CPI and PPI. Now, if we look at inflation over the past 4 years, you're saying, okay, one of these kids is not like the other, right? It's clearly outside the norms. It's well above our, I'll say historic, but bear with me, I'm going to show you longer time frames. But a lot of people will say this is historically high. Well, yes, in the period of the last 4 or 5 years, it is definitely very high. We were running at like 2.7, almost 3% back in 2018, and now we're very close to 6. I think it's actually 5.2 to 5.3% inflation rate annualized. So it's definitely higher than normal. But if you look at the longer term picture, let's go out to, let's say, 1996, we're really just coming back into those highs that we saw, conveniently enough, right at the beginning of another major market crash in 2007. So the rates were rather high in 2007 with regards to inflation. That was precipitated by a long, sharp drop from 2008 to 2009. Aggressive, I say long, but a significant drop in value from about 5.5% inflation all the way down to -2 during that recessionary period in 2009. Now, look where we are today. certainly the COVID drop that happened in 2020 put us down towards zero, but we have vaulted up. And of course, that goes back to my conversation of the printing of money and how much has been printed in just an 18-month, 19-month period of time. We've increased the money supply to the tune of about $14 to $15 trillion, whereas the 75 years before this, it only rose 2.5. So clearly that money increase is creating inflationary pressure. But where is it in regards to the big picture, like the real big picture, huh? Okay, most of us probably don't care about going back into the 1920s and maybe even earlier. I don't even know when this chart starts, but you can see 1938 on here. We have had some pretty significant swings. Now, we are nowhere near the inflation numbers that we saw back in the mid to early 80s, which is obviously a very good thing. You can see back then, inflation numbers were running right around 15%. And Paul Volcker, what did he have to do? He had to just raise rates significantly to slow things down. Hey, Brendan, good to see you. I got your email. Thank you very much. I will talk to the powers that be. I think we'll get you on board here sometime soon, man. I think it'll be a good fit. I'd love to get Brendan working on my crypto program. So right now, this picture, it looks great because what's our trend? And again, the only reason I bring this up is to see where we stack against historical norms. Now, granted, the Fed mandate, they have a specific number they're looking for on all of this. However, I think we would all agree that in the short term, that trend is aggressively strong. We could argue it's coming near supply. Granted, I don't think inflation has supply and demand zones respectively, but we can see the trends forming. And that trend really since the mid-80s has been nothing but down. Lori says, remembers the 80s? Yeah, I can't imagine having a 17, 18% mortgage. I mean, here I am gloating over a sub 3%. I won't be boasting anything if I'm getting a 15 or 16% mortgage. I'll be embarrassed to be buying at rates that high. But I guess if the economy is growing that fast and your property value is increasing even more, then okay, right? I guess if assets are growing at 20% and inflation's 18, you're still growing at 2%. Sadly, inflation is eating most of our profits away at this point. God, I haven't had a beer on a Thursday show in quite a while. So those are our first two numbers. Our first number is their mandate of keeping that prices stable. I would contend that the prices are not stable. And there was a press conference yesterday. I can't even remember the name the gentleman was saying, but it says, if you strip out things like food, energy, meats, inflation is in check. You strip out food, inflation, and meats. You're telling me that inflation is in check. Isn't that what inflation is supposed to measure, or the cost of those goods and services? So even the government right now is like, oh, shoot, man, inflation's getting out of hand. Anyway, where does it mean we're headed? Who knows? The Fed has called this number transient, saying it's temporarily high, which it very well could be. But I'm in the same camp as Brendan here. He says inflation is going to get worse when the velocity of money increases. And right now, you're seeing so much money pumped into the economy. I agree. I think you'll see this number creep higher. And as soon as we get above these numbers here, let me see if I can get my beautiful pen. I know you guys love when I do my pen drawings. I feel like I'm back in fourth grade. If we get above this line right here that I'm highlighting in red, not exactly the best line in the world, which is 6.5%, 7%. If we get above 7% inflation, it's going to be one of those oh shit kind of moments. And I think that's when you're really going to see the economy freak out about it, because we haven't had inflation numbers like that going back into late 1980s. So will be an interesting time here over the next few weeks. So I guess question number one, is the Fed hitting the mark with regards to inflation? Their target is 2%. And I'll show you a graph here which will represent, it's called the Fed Bullseye, which they produce. It's actually on the Fed's site. But their number they're targeting is 2%. So I would say we're well above it. They're looking right here, and we're exceeding that significantly. The second mandate is going to be maximum sustainable employment. Now, to me personally, I think that's rather subjective to say what's the maximum sustainable employment. There's just too many pieces moving there for that one. But we'll look at the numbers anyway, because today we had some data that came out with regards to initial claims. Now, this is people who are newly filing for... Thanks, Mario. Mario was in the CIL this morning when we talked about NFTs. Yeah, my drawing could be an NFT. Guys, if you see what these NFTs are selling for, it will blow your mind. Some of the stupidest artwork you have ever seen in your life is selling for $20 million. I was like, come on, man, this is dumb. If anybody here is an artist, like a digital artist, contact me and I'll set up an NFT site for you, and we'll get some. We'll see if we can get you a multi-millionaire in no time. Anyway, you look at these numbers going back into here. So I'm circling right now this kind of pre-2020, pre-COVID pandemic issue. those numbers were, with regards to initial claims, were right around 250 to 280. And it was rather consistent. You see there was really no blips on this radar. It just kind of stayed flat. That's what it's supposed to do. Of course, when we had the COVID pandemic, unemployment claims went through the roof, and they've been slowly dropping. And the good news is we haven't really seen any spikes up. It's been consistently getting lower and lower and lower. And I would contend that right now, these initial claim numbers are actually getting back down to some nice normal levels. I know the normal levels is kind of subjective to say, but getting back to what we were experiencing in 2018, 19, and 20, which is good. We're getting back to normal full employment. And I would contend that if we, 100% stop any sort of unemployment perk and benefit that doesn't need to be there anymore, this number would probably drop even lower because, let's be honest, the jobs are there. The jobs are absolutely there. We just get people who would rather stay on unemployment because they make more money there. Well, let's incentivize them to get off their butts, and this number will be down here at zero in no time, meaning we've got absolute full employment and nobody's filing for unemployment. So I would contend that the Fed has probably done a good job at getting this back down to normal, but that's not the number that they're reading. They are reading this number, the unemployment rate, which, as you guys can see here, going back all the way to 2008, we're still relatively high, right? We had that during the recession in the 2008, 2009, unemployment was high, getting to the double digits, got to about a little over 10%, but it's been pretty nice trajectory southbound ever since. Now, the Fed said back in 2010, 2011, that their target for full employment was, I think it was 5.5%. It was 5 or 5.5, which would put us somewhere right around where that red box I'm scribbling on your screen is. Well, if we look at where we are right now, we are exactly where they called full employment for the 2009 recession, which tells me that we're on track, right? The Fed has definitely been slicing down at this unemployment number and hopefully getting us back to a more manageable unemployment number. Again, I think that this goes back to the discussion about, are they doing the right things? Are they creating jobs by flooding the market with, or buying all these mortgage-backed securities and keeping the treasury purchases every month to the tune of $80 billion, keeping that going? Is that directly giving us unemployment rate benefits, or is that simply lining the pockets of the major financial institutions? And I would say that's probably their third mandate, would be benefiting financial institutions, which of course the Fed is run by banks. So now let's go look at the plot that they've come up with. So this is directly from the Fed side. I had to modify this a little bit since we're talking about, are they on target, right? Are they achieving their goals? Well, right now, if we look at the unemployment numbers, so there you go. There's your unemployment, right around 5.2. They're saying, according to this bullseye, that it's about 4.2% would be their target. Okay, well, I guess it depends on when the Fed talks and who's speaking. But right now, we're right at about 5.2% for unemployment numbers. How about and that's the x-axis is unemployment. The right axis, or the y-axis, is going to be inflation. And that inflation is up there, way at the top of your screen. So if I was in an archery contest right now, I may have hit a judge sitting in the bleachers as far as them hitting their targets. And the only reason I put these graphics together like this is this chart, this bullseye, is from the Fed. This is what they're targeting. And all these actions, printing $14 trillion, buying just billions and trillions of dollars of mortgage-backed securities, and keeping the short end of the yield curve down by buying all of our 10-year, et cetera, and short end, is supposed to have met the mark. And they're way off right now. Now, of course, it was much further off than this. Right, it was way off, but it's slowly getting better. My assumption will be in the next few months we'll be down somewhere. At least I think in the next few months we'll be somewhere like this. I think that the red dot will not be moving down, meaning inflation is not going to get any better. It'll actually be moving up, but it'll be moving closer with regards to unemployment. I think the unemployment number is going to get better, but inflation is going to get out of hand. So then I have to ask you guys, if we get unemployment back to normal, and let's say we meet their target of 4%. It's 4.2, 4.3%, but make it 4%, make it easy. We get unemployment to 4%, and that's 50% of the dual mandate. So they've met that challenge, but in order to do that, in order to get full employment, they have done what? They've fueled the fire too much, right? They've stoked this fire of spending and of cash in the economy. What are they going to do? How do you rein in your inflation numbers? Right? If it gets much higher than it is now, which I think it is, we're at a little over 5%, annualized. I think it's actually 5.2, and we start to see that shoot up. Where are we going, guys? What do you have to do to rein in that inflation? What's the Fed going to do to meet their dual mandate? They have to do something. They can't let inflation keep rising like this. What are they going to do? That's a pretty simple process. I love the 30-something second delay until I get responses. I wanted to do live because I do have fiber optic, but I'm always worried that it's going to degrade the quality of the stream if I go to instant response is allowed on the show. Maybe I'll try that one of these days. Anyway, in order to rein in inflation, again, we did shows on this in the past, right? You have to raise interest rates to slow it down. You have to remove money supply, which they've already started to do subtly, is remove money supply from the economy. And number 3, you start to raise reserve requirements. Yes, and you start to unload your balance sheet, right? And and that's perfect, FX. That's one of those 3 variables. Number 1 was you reduce the money supply. So what they would do is they have to sell treasuries, which they are buying. They'll have to stop buying treasuries. Number 2, they'll start selling the portfolio that they have, and when they do that, they take that money and they remove that from circulation and start to drop money supply. So that's the first piece. Brendan, I don't think that would work today. I don't think you can pull a Volcker, which is don't tell anybody what you're doing and just keep raising rates and raising rates and raising rates. I think that Powell would probably be assassinated if something like that happened, the way that this financial market is built around his every word. So if he starts to jump rates from 5% to 6% to 10% to 20%, oh man, someone's taking him out, because that would cost trillions of dollars to these major corporations out there. I don't think they would pull a Volcker. I don't think so either. So it's interesting, and I've been raising this question about what's going to be happening here soon. I don't know. I started this as kind of a question: has the Fed met the mark? I would say there's certainly AIM is getting better, but boy, it's difficult when it was so far out of whack, right? These numbers were just so far out of whack that it takes some time for them to get back to normal. It will take some time, but again, I think that the piece that Powell keeps downplaying is they have put so much money into circulation that inflation number is going to get worse and worse and worse. And if we get full employment, that means more people are spending. And you're just going to exacerbate that problem. So I think the definite writing is on the wall for something big down the road. Maybe next year sometime. I think on one of last year's shows, I was targeting 2022, mid to late 2022. I think we'll see some real big problems for the market. That said, I have already I opened up some positions today. I bought some puts on the S&P. Let me go back to, I'm going to try to get away from TradeStation now, because TradeStation just is being mean with their data feeds. So here is our top 7 for today. I will run from the bottom and work my way up and tell you as we go kind of what adjustments I have made. So number 1, we had crude oil leading the south side charge. Now I'm going to leave these boxes that we discussed on yesterday's show, that yellow box, I'm thinking that's yellow or orange, which is the big trend, and then of course this little blue or purple box, whatever color that is, showing this kind of shorter term trend to the downside. And to me, the short term one is still in play. It's in play until it's not. I know it sounds stupid and binary and academic, but that's exactly what it is. We need a clear decision that this purple box, blue box, is violated. For now, it looks like it's trending down to me. So even though we were down 1.99% on crude oil today, you're still bouncing right off these levels. Right, it's coming right down to the bottom end of this range that it's been stuck in for about 2 weeks. It's just been kind of stuck here. I'll say the low end is right around 67.40. And until we get below that, again, just stay out of it. I think somebody mentioned on the show yesterday, says, hey, just stay out of it. It's sideways chop right now. I agree. I do think you'll see it drift down because the dollar and other factors, but that's just my opinion, and my opinion doesn't matter to any of your accounts. It's your decisions that matter there. So that's your worst performer on the day. S&P 500 actually was looking fairly decent today and then started to roll over. So I'll zoom in a little bit so we can see that. You can see the volume starting to pick up. The downward move was pretty good today. If you look at this on a 15-minute time frame, I'll zoom out a hair. You can see that we came back up into some supply levels from the 7th, and that was my target to enter on this one short. Fortunately, it was happened during regular market hours, about 45.28, so about two more puts for this. I still stay with the Novembers, even though it's a little bit closer than I want to do. That's only 2 months. I normally go 3, but I have the Novembers already, so I just piled more into the Novembers. and we'll see how that one pans out. But right away, it was a pretty nice move, erasing all those gains for the day. And I think when you look at the daily time frame here, I'm not saying that anything's broken. I'm not saying that this is the collapse. I'm not saying this is the end. It's just a pullback at this point. To me, if we start to get below 44.60 on the S&P, then I'll start to feel more confident, and I'll probably be building a bigger position to the south side here on the S. But as you guys know, for most of the last year, I've been getting pretty much all the puts I've been buying have been getting crushed. Just taking it on the chin for a lot of these puts that I've been buying. I fortunately have some equity still, so I can continue to do that. At some point, I will nail it right, but I'm not getting overly cocky or greedy like I was back last year with that huge put position that I was in that just ate a lot of my gains for the year. So we'll see how this one progresses. Right now, I like the way that it finished. It finished on a very weak note. It was aggressive near the end as well, and you had higher volume, which means fear is ticking up. We can see that reflected by the VIX, right? Not only is September a volatile month, Brendan, it's actually the only negative performing month going back in the 1950s for the equity markets. Now, when I say negative performing, it's like negative 0.02%. If you take the markets overall year after year after year for decades and you average up every month, historically markets are built to go up, so they should all be up over time. Interesting that the S&P was on just ever so slightly to the negative side. All right, so let's keep going through some charts here. So there's your VIX for today. You can see that it's spiked a little bit, still relatively low given the fact that the market really had some picking up volume today and started to look a little bit weaker. So I'll keep our eye on that one. But yeah, two more added on to my ES position. The Dow, oh yes, continuing on. There was all this wonderful talk track this morning by the big talking heads that, wow, the Dow was on track to break a 3-day losing streak. Yeah, almost made it. Didn't quite happen. We were down 0.41% on the Dow futures today. It did an about face just like these other indexes. Started off strong and then just came ripping to the south side and moving lower and lower and lower. So not great for the Dow. I would be eyeballing some of these levels a little bit lower as potential turning points, like 34.6. Other than that, I think it goes all the way down to 34,000, which I believe was a viewer's trade setup from the other day. So not too bad. Good. And I think, yes, somebody was talking about going short on a break below 35.2. And we're like, well, not quite yet. Hey, you know what? I hope you're still in it. It's looking great for you right now. You were right. And then NASDAQ, the NQ, not quite rolling over, right? It looks like it's just getting a little weaker. I did buy 2 puts for November as well on this one, just to kind of keep my portfolio going with positions. Slow rollover, not really a big day. It was just barely down 0.3%. You can see right there, 0.37% on the day for the NQ. Really nothing convincing for me until we get down below 15,525. Once that breaks, then, okay, I'm feeling more confident. We'll see some more aggressive downside action on the NQ. Now, moving on to Bitcoin, let me skip Bitcoin. I'm going to go to the Russell because we'll talk a little bit about cryptos near the end here. Here's your Russell 2000. As I told you, I sold some puts, which are expiring next Friday. Still totally fine with that. I should probably put my line on here at 212 because that's where those puts were written for. Get the number up there. Come on. This is going to be... I do IWM, so we'll just do it on the Russell. So we go 2120. There you go. So that's where my puts are at, is that 2120 mark, and we will see if that holds. But I don't think we'll get down there by next Friday, so therefore collecting some premium for me. I was actually positive on the day for the Russell 2000 as well. And finally, gold. Yeah, I haven't said gold's name in quite some time. We had that really aggressive move a couple days ago to the south side. Today you had a small little green candle. Nothing great. It was still positive, 0.16%, which was kind of surprising, especially when we look at, we'll do GLD real quick just so you can see the ETF version of it and all the gaps. Then I'll go SLV, SLV to get a comparison on silver. I do have the 21 puts on silver as well, which are expiring next Friday as well. I've got, I think, 50 of those. So we have quite a few SLV puts in place, just collecting 1% premium for the month. Again, I don't think we'll get down there by next Friday, but we could. The overall trend, for me anyway, from the July peak or June peaks is certainly down. Lower highs and lower lows. Yeah, isn't it, Brendan? Selling premium is the sweetest of all. It is. Here's the problem I have with it. I love selling premium because you have this sense of security. You're saying, hey, I'm selling something. I'm selling an option on something I want to own anyway. Like, I'm happy to own silver. I'm happy to own gold at lower levels, of course. And you're going to pay me for that? Perfect, great. And if it doesn't get down to that level, I get paid anyway, 1%. So it's great. But the problem is, I can sell a 1 month put option and maybe get 1%. Depending on something, I could get 2 or 3%, but it's probably more volatile and I'm assuming more risk. But I could buy puts when I think something's going down, and I can make that 1% in 10 minutes, right? I could make 50, 100% on some of these options if I'm part of a big sell-off. I mean, the sell-off that happened back in February of 2020, I mean, that was a phenomenal rate of return in just about 2 weeks. I mean, that portfolio was skyrocketing to triple-digit gains and then some. So, you know, you don't get the big out-of-the-park home run grand slam type of trades when you're selling. But when you're buying, you can. I guess that's just one of those trade-offs. You have to figure out which side of the fence you want to be on, which is why I told you in one account, it is purely selling, right? I don't do anything in that account other than just sell, and I consistently just build and build and build. And I love it. It's fun. I try to do it just once a month where you don't mess with anything else. Just keep it there. And then the other side of things, I am buying put options in another account. So the account I'm told you about, that's just where I can just buy in there, right? So I have specific rules for different accounts, which I find very useful for me. All right, let me see. What did I miss here? I saw a bunch of comments and questions. Good to have you back, Brendan. He's always chatting. I like it. The worry is when consumer confidence increases, spending increases, and inflation expectations fall. Well, consumer confidence numbers don't mean too much to me. I've learned that the consumer is generally wrong. I hate to say it. So if the consumers are getting overly confident about something, that's generally where I think things are going to turn. So I'm almost using it as a contrarian indicator for my trading and my actions. What else do we got? J-Powell is not going to raise rates. He is too scared of the market crash. I don't think he gives a shit about the market crash. Honestly, Pro 3.5, I don't think these guys care at all. You know why? Because if you are Powell, I can position myself well before I make those rate announcements. I can do a million different things to subtly, behind the scenes, reallocate my portfolio to a bearish position, whether that's using options or futures or jump derivative product. I can go and manipulate that market or product so that my whole position is short. He doesn't care if the market crashes. What they don't want to have is that legacy that they screwed things up. That's more concerning, I think, because bull market or bear market, these guys are going to benefit. They're going to profit on it no matter what, period. Because they're the marionette controller, right? They're just pulling all the strings. So there's no question in my mind that they're fine with it going up or down. What they can't have is that legacy black eye that, 30 years down the road, do you remember when Jay Powell completely screwed up our markets? That's what they're most concerned with. He's an academic, guys. He wants to go and do speaking engagements and travel the world and be this guy who saved the markets. And yes, he doesn't want to have that black eye. Nobody would hire him to be a speaker if all of a sudden he's the one that destroyed the market. So I think that's more of a concern, is legacy and reputation from his time in office. Yeah, insider trading, say it isn't so. I'm saying it is so on a grand scheme. It's funny, over the years, through all my people I've known and the fortunate experiences I've had being on the floor of some market makers, which is really one of those experiences I'm so glad that happened. I honestly cannot believe that they brought me onto the floor of one of these major market maker firms. It was crazy. Just to watch what they do, it's the man behind the curtain. You know, you think, they're providing an efficient liquid market. No, they are, but they're doing everything in their power to screw everybody else over and benefit themselves. That's pretty much it. The only thing they care about is making money for themselves. And the amount of ways that I was counting that I could have, and I am not this type of person, but the amount of ways that they could have easily front-run order flow, manipulated markets, created fomenting. Foment is an actual term in the financial world, which is where you create an impression about something that's not true. Jim Cramer has the best of that. Bye, Lisa. Good to see you. Thanks for joining us today. Jim Cramer has an excellent video on it where he talks about fomenting and how hedge fund managers will manipulate the market. Of course, Jim Cramer was a hedge fund manager, and he says in the video, I never did any of these things. Well, Pinocchio calling, line 2, Mr. Cramer. Anyway, the amount of things that you could do illegally without the Fed, the SEC noticing is off the charts. I mean, I could write a playbook for you right now on how these firms could be illegally performing actions and not getting caught. caught. It's easy to do if you know just basic logic of communications and understanding what the SEC is looking for. It's happening every day. I mean, this is what drives our markets, is deceptive illegal activity by financial institutions. All right, let's see what else got on. Chris, cool. Yeah, especially if Powell wants another term. You know what? I don't think he does. I think that these guys are like, they go in there wide-eyed to say, this is like the peak of getting your resume, right? If you're like a trader, it's like saying you were the lead host on CNBC Business. That's like the peak you can get. After that, you just quit. Because you're not, where are you going to go? You're going to go into political office or go work for Goldman Sachs or something. But I don't know if this guy wants another term. He'll make more money just doing speaking tours and writing books. And yeah, I would love to say I was a Fed chairman or part of the Federal Reserve. But then again, the risks that they have to deal with is just, I don't want to deal with it. The security of the country, I don't want that on my shoulders. I have a hard enough time managing the security of my own personal financial future, as I'm sure many of you do as well. Okay. That was the overall market. Now, I want to go to crypto real quick just because it's what's hot. It has been absolutely steaming. Part of what we've been talking about in the Crypto Investor Live program has been just some of the different companies that are involved in the smart contract space and the ones that are really the marketplaces for NFTs. And they have been soaring lately. Yes, they're soaring. Check out some of these numbers. Lucky for me, at least it's some saving grace, the Solana is down today, thank God. Look at that purple line. It's so funny when you're like, oh, okay, I got out and I made 400% profit. I'm loving it. And it all of a sudden runs another 200% in your favor. You're like, you've got to be kidding me. Come on, man. Anyway, who cares? I got out, made a great profit. I'm happy, even though I could have made another $70 or $80 on this. So Ethereum, taking a little bit of a sell-off today, not big gains. And it's not surprising because what we saw was a lot of the competitors in this space over the past couple weeks have been the biggest gainers. So you're talking Ethereum, Solana, Cardano. Cardano I added some to today. So I bought some Cardano today just because I'm really anticipating the launch of Lorenzo, which is going to happen Sunday night. So for those of you who are in Cardano, this might be a nice play. You have Chainlink, which is the newest addition to my portfolio. Added some of that the other day. Came right in that nice demand zone, has been bouncing off it ever since. Civic, I didn't sell Civic. This is one I was kind of kicking myself that I didn't get out of this one. I bought Civic when it was down in like the 12 to 13 cent range. I mean, it's been, actually, I take that back. I've had this for a long time. So I've had it since way back in here, which means I'm in the 4 to 5 cent range on my Civic. Now, Civic is an identity token. But you notice that price chart. I mean, holy cow, they have done something crazy. They went from 35 cents to $1 in one day. Love it. I didn't sell out, but I will. The main reason why I haven't sold out of this, guys, is gas fees. Gas fees for Ethereum is way too high, so it cost me so much money to convert from Civic back to Ethereum. Some of the other exciting ones, FTT. This is a recent acquisition for me as well. This is a decentralized exchange, and I'll probably start talking a little bit more about decentralized exchanges on this program because a lot of things that we do when you're looking at trading futures, when you're looking at trading options, when you're looking at trading Forex, you can do almost all of that on a decentralized exchange without having to go through a TradeStation and Interactive Brokers where they keep KYC and all this crazy information and data. You can do that on exchanges like FTX. It's just blowing up. It's crazy. The guy that started FTX, and he's got like a few other companies as well. He's in his 20s. He's got this just big old afro hairdo, and he lives with two other roommates. The guy's worth, I don't know what the final number was. I think it's something like $4 or $5 billion. He lives with his roommates in a really minimalist looking apartment. He sleeps on a beanbag. Okay, if I'm in the $1 billion category, I assure you, I will spend money on something. And I'm going to spend money on like a Sealy Posturepedic, the top of the line bed, so I sleep really, really good. Oh, all right. Algorand was one that's in my portfolio as well. Algorand is another contender that's trying to create a fast transaction type of blockchain and get people onto that ecosystem. So Algorand doing great today. Last couple days have been phenomenal, going from about $1.25 up to $2.50. So you're looking at 100% rate of return in just a couple days on very high volume. When I see things like this, though, it makes me think it's going to retrace and come back. So I may have to, I may actually sell out of some Algorand, but I made the mistake of jumping ship on Solana after its big parabolic move, and look what happened there. It just keeps on running. All right, that was just kind of a quick little rundown. The only other pieces that I think are noteworthy is talking about are like the yields. So here's your 10-year. It had been on quite a nice slide for about 4 or 5 months. Now we've stabilized and started to creep back up. We'll call it 1.30 is what we're looking at right now for that 10-year yield. Big picture though, looks like rates are still going to continue to go up. All right, they accelerated a little too quickly here in February and then started to drift back down. I'm looking into Kraken, but FTT is not on Kraken. Correct. You'd have to go to different sources, Mike. You'd have to go to something like SushiSwap, right, or Uniswap. Uniswap's probably the easiest one. You have to pay a fee, right? Uniswap charges fees, and of course you have to pay the Ethereum gas fee, which is why a lot of people don't like to use Ethereum. Hopefully that changes here soon. If we can get a change in the gas fees for Ethereum, then I think Ethereum's off to a very promising future, but they got to get those gas fees down. It's just too expensive. So you have to use a swap site, decentralized exchange, something like Uniswap would be a choice there. You were only showing ES? Oh, was I on the wrong chart that whole time? I didn't show you guys any of this? Dab nabbit. Thanks, Les. I have multiple monitors over here. I got the S&P on this one, and I've got S&P on my left, and the 10-year and all the other charts I've been doing on the right-hand side. So I guess I screwed up and showed you the wrong one. So thank you. I didn't realize I've been showing you the wrong charts the whole damn time. All right. Well, sorry about that. Let me know if you want me to go over anything else. What else do you guys want me to go into? Anything you want me to cover before we start to bring it home? Not really too much to speak of in my opinion with regards to metals. You know, I can look at things like silver over here, which you already looked at. You got platinum and palladium. Nothing great. Platinum, if anything, is looking weaker and weaker and is getting very close to a breaking point, in my opinion. If you look at that 960 mark right here, right, 960, down below 960 for platinum, I think you're going to see a nice drop straight to 920 where the next demand zone is, and then all of a sudden from there, you're looking at going all the way down to about 850. So, you know, normally platinum's not on my radar from a trading perspective, but it is looking weak. It looks like a potential short here on a breakdown. Palladium is obviously falling apart, but I don't trade palladium, so I really can't make any comment technically on, or I can make it technically, but not from an execution perspective because I never traded palladium futures myself. But that one's just falling apart right now as well and looking weaker and weaker and weaker. All right. No other questions? You got nothing else for me? I figured you guys have something out there. I went through the whole list. Oh, yeah, there was a question about natural gas. Apologize. Again, the question came back in, what do you do with natural gas? You go long. I mean, we had that pullback in early August. That was it. We had that small little pullback, and then it's just been off to the races yet again. What I do generally with this is I'm looking for a selling moment, right? Like, where do I think this thing's going to turn? Well, only thing we can do is go to the weekly, and you notice that this last week it's ripped through these highs from 2018. So now we got to go even further. From here, I mean, do I look at 650 as the next target for natural gas? Man, that seems like a long way to go, although nothing out of the ordinary in my opinion. I think that it's definitely potential, but you know, I would be looking for something like here to short. But I know you want to buy into this trend, but I'm not buying now. If anything, we had that 383 marked out as a potential buy point, and it's hopefully going to come back and retest that so you can get in. Verizon, you say? VZ, huh? I like it, but the problem you have on this one, NJ, I love the downward trend, at least for the past few months. On the daily, right, looks great. Trend is your friend, right? Problem I have with that is, where are we at? You are right at this base down here where we've had consolidation back in February of 2021. So while it looks weak from this downtrend that started in May, lower highs, lower lows, trending down, going short right now I think is actually very high risk. Because if anything, it's going to bounce right here. Yeah. Pumping gas. All right. Wait, pump some cryptos, Brendan. No. If anything, I think that you'll see Verizon bounce from here. But, you know, if it does bounce, maybe 55.50 becomes your shorting opportunity, or 50. You know, wait for it to bounce back up a little bit because that trend does look strong, NJ, to the south side. But, you know, you're coming right into an area where it bounced before. So I'd feel a little pessimistic about shorting right now. Wait for a bounce to the upside. Current thought, okay, you always like cannabis. Let's see. Mike likes the MJ. Oh God. It's funny. I have not looked at cannabis in a few weeks, and I think you remember you were asking about this one repeatedly, and we were talking about it, breaking some highs and starting to look positive, looking great, right? And saying measured moves from this flag. This is actually, we did measure this. It was supposed to be a measured move from, I think, from one of these moves we looked at here. Right now, Mike, you know my answer. I don't need to do a show for this one. You know my answer. Cannabis looks bad. And again, even though I'm bullish in the industry, what's that trend tell you since February? It's been nothing but down. A couple little bounces here and there. You're near demand zone right now. At least that demand zone that was formed about on the 20th of August, 23rd of August. So you're near that spot, but boy, it just doesn't feel good. It feels like there's a magnetism to want to close this gap. So I'd be looking at something like 1450 as a potential buy point. I just don't know if I would take that chance now. You're kind of catching that falling knife. You're watching the avalanche come right at you going, I should stop here. Well, maybe not. Again, I am bullish long-term on it, but this chart looks absolutely awful. Absolutely awful. Long-term crypto I'm trying to hold, but I skimmed a little. Hey, I did as well. I took some money off the table, and as they say, you'll never go broke taking a profit, which you could poke some holes in that argument that you actually could go broke taking a profit. But, when you have big gains, I'd rather lock those in. And if it keeps on going in my favor, oh well, too bad. I usually prefer when it comes crashing back down and you're patting yourself on the back going, man, I timed that one perfectly. Got it right when I should have. Amazing. All right. You guys got any last minute questions? Come on. Send them on in here. I got a few minutes left or I'll wrap things up. I know we have, there we go. When is the SPY going bearish? What do you see as a demand level? So it's not necessarily that I see it going bearish. Let's look at the S&P. So this is kind of how I have things mapped out. I'm looking at this line right here, which is, for me, I'll call it 4460. 4460 on the S&P is where I think we're headed to next. I think we're going to drift down to 4460. Then the question is, what do we do there? So if it hits 4460, I'm expecting it to bounce up, right? Because the trend is up. I feel like it's going to sell off, bounce again. Sell off, bounce up again. Because the trend is overall to the upside. If we get a close below 4460, then I'm not screaming from the rafters, short the hell out of it, short. No, not yet, right? I just want to see it kind of drift down here and maybe get down to this 4400 mark. Once we get close below 4400, then it's like, okay, now I'm really starting to position myself to the short. So I can't fight the trend aggressively all at once. I'm slowly building in, and if I'm wrong, I'll take a small loss. But as this thing starts to break key levels, right, that 4460, then the 4400, and heaven forbid we should get below 3450, I'll be building every time we get below those levels, and I will continue to snowball into a bigger and bigger position. So, Darren, you said any word in the crypto spreadsheet. I'm not allowed to give that out per the powers that be. I'm happy. I could give out the blank template, but not with all the numbers in it, and the logic behind that is, and it's stupid, but they have to be so careful with regards to FTC. The FTC, one of their things was people making claims that are unsubstantiated, which I think is stupid because this show is a non-online trading academy show. This is Merlin's show. It's under my own company, so I don't care. FTC, come after me for whatever you want. I can make this statement. I bought, I can actually show you. Let me bring up the chart here. These are things I can't do at OTA. I cannot say things like this. I bought Solana at $30, which is right here, and I sold it right here at $139.68. I cannot say that. I'm not allowed to say that because it's now sounding promissory. It's saying that I'm telling you that you're going to make that money. So the issue with the spreadsheet is this. The spreadsheet that I built, it's a matrix of all of these different brokers. I think I have like 10. I'm hoping to add in about another dozen more. It shows all the different rates that they're paying right now. And the concern is that it may sound promissory. That if I send this to you, that I'm saying you're going to get these rates. So they're being way too cautious in my opinion, but I was just told not to. So anytime, Darren, during the CIL, just say, hey, can you bring up the rate sheet or where could I get the best rate on this? I will gladly do that for you, no problem. I'm hoping to get it built into my OTA or in some kind of mastermind grid type thing where you guys can see all these numbers. But right now I can't send that one out. But I'm happy to let you know where all these rates are and what they are. And they're just protecting themselves. And I get it. The FTC has obviously, in my mind, overstepped their boundaries significantly. And anything sounds like a claim. Okay, I'll send you the template. Absolutely. The other thing is this. I didn't mention this one or talk about this, but this is really important. I don't know if you guys saw the news about Coinbase or saw my tweet last night. I was so pissed off. Basically, what the SEC has done is gone to Coinbase and said, oh, you're going to pay your clients, your customers who deposit USDC, which is a stable coin. They're going to deposit USDC at you, and you're going to tell them, hey, at Coinbase, we'll pay you 4% for those deposits. Does that sound fair to everybody? Right? I'm keeping my crypto at Coinbase. It's actually a Coinbase-backed product. USDC is backed by Coinbase and by Circle, which is owned by Goldman Sachs. So I keep those stable coins there, and they're saying, we'll give you 4%. Seems logical, right? The SEC basically came in and said, we're going to sue you. We're going to sue you for doing that. And it's like, hold on a second. So you're telling me that I can take $10,000 and I can put it in a savings account at JP Morgan, at Wells Fargo, at Bank of America, and those SOBs will pay me 0.1% interest per year on it. So I'm going to take $10,000, I'm going to make $10 a year. Don't waste my time. What a freaking joke, right? So why can't I have the opportunity to go to somebody like Coinbase who's saying, hey, we'll give you 4%, and I can make 3.9% more than I would have if I kept it at the banks. To me, this is absolute BS. It is the financial institutions. The reason crypto started is because of banks, centralized entities, manipulating and controlling people and their money. If I got money I'm going to send Brendan, I should be able to do that no problem, anytime, 24/7. Nobody cares. Let me send it to you. In banks, I can't do that. I'm questioned on everything. So, yeah, exactly. Let's see them sue a DAO. Absolutely. And that's going to be there soon. So, I don't know. I kind of went off because it's like the banks, I'm pretty sure, are putting pressure on the SEC to make this stuff stop. A lot of things we talk about in the CIL program, Crypto Investor Live, I'm basically, most of my crypto, and Brendan, I think you'd agree with this, if you go back a year or 2 years, you would just buy and hold crypto, right? You just buy it and keep it wherever you wanted to. But now you're incentivized to keep it in different wallets on different exchanges and get 5%, 10%, 12%, 20% just for keeping your stuff there. As a consumer, I have to be able to have that choice. That's my risk. I know I'm taking that. And somebody retweeted back to me and says, well, what if you bought Bitcoin and you earned 4% from Coinbase, but Bitcoin went down 30%? I'm like, as a consumer, that's a risk that I'm willing to take. And I should have that freedom. It's financial freedom, which has been taken away because of the SEC and other regulatory bodies under the guise of protecting you and keeping things safe for you. It just, as you can tell, it really pisses me off. Did you say an agenda? Maybe, to me, it's embarrassing. And if you watch Jim Cramer's interview about this, he's such a clown. I mean, Jim Bozo Cramer was going off calling the CEO of Coinbase irresponsible and stupid, one of the dumbest things he's ever said, because the guy from Coinbase, Anderson, yeah, I think it's Anderson, was basically saying, there's some shady stuff going on with the SEC. You're going to basically point your finger at Coinbase and say, we're going to sue you, but then not really give any clarity on what the solution is. You're just going to sue me arbitrarily because I'm going to give 4% to my clients. What's the problem here? So anyway, that's going on right now. It's going to be really interesting what happens over the next few months. Personally, I think it's partly a smokescreen for the SEC to go after somebody they might be able to win a fight with, because I think they're going to lose the Ripple fight. They might lose this one as well as the industry starts to change and morph. But I agree with Brendan. DeFi incentivizes yield with self-custody. It's basically saying you are now your bank. And banks have been notoriously the ones who rule the world. They're the money controllers. And if we can be our own bank, then what can we do? We can rule the world ourselves, not necessarily the world, but we can rule our worlds, which is the freedom that DeFi presents us. All right, guys, that's going to do it for me. I did take a whole bunch of graphics and screenshots of the economic data coming out tomorrow, but of course, I have been running so quickly today trying to get everything done, I forgot to put it all in my update. So as far as earnings tomorrow, really nothing to speak of. There's not much going on in tomorrow's trading session. However, on your economic calendar, there is a little bit more on Friday. You have some things going on, nothing really important for the U.S. except consumer sentiment and inflation expectations. If you're trading the euro tomorrow, you do have CPI numbers coming out, which will be interesting, although that will be at 2 a.m. before the market's even open. So that might set the stage, and that will do it. So I think that's going to do it for me for today. Hopefully my little rant didn't deter anybody. I saw the number of viewers drop sharply as soon as I started going off on the SEC. Anyway, that's going to do it for me, everybody. Again, no show tomorrow because I have a meeting I have to get to. So a happy cheers, a happy Friday to all of you. I hope you had a great trading week. Whatever market it is that you are trading, may all your trades be green, and I will see you guys on Monday. If you have questions, send them on in at TraderMerlin@gmail.com. As usual, that's the best way to get in touch with me. Send in questions, comments, feedback, etc. And I hope you guys have a great weekend. Take care.